NVIDIA, NASDAQ, NVDA, is a behemoth in the AI stock market, leading the charge with considerable aplomb. The company's recent accolades are incredibly compelling, including a third-quarter sales projection that confidently overshadows analyst predictions. It also has an assertive $25 billion share buyback announcement, indicating confidence in its trajectory, while big money confidently bought 91.6 million shares and parted with only 76.4 million. The company's second-quarter financials were the real eye-catcher. With an earnings per share of $2.70, up an astounding 429% year-over-year, NVIDIA comfortably soared past analyst estimates. The sales for the same quarter doubled to $13.51 billion, surpassing the $11.2 billion analyst benchmark. Furthermore, its forward third-quarter guidance teases a potential $16 billion revenue, significantly above prior estimates. The insatiable demand for NVIDIA's AI microchips attributes to this enormous bump. With the NVIDIA stock tripling year-to-date, the future seems remarkably bright for NVIDIA. NVIDIA's second-quarter sales doubled to $13.51 billion, driven by surging demand for NVIDIA's AI microchips, eclipsing Wall Street's $11.22 billion estimate. The second AI stock's name is Tesla. Institutional investors continue to back EV juggernaut Tesla, NASDAQ, TSLA, scooping up 70.8 million shares in its most recent quarter. Financial juggernauts, including State Street, NYSE, STT, and Morgan Stanley, NYSE, MS, braced their portfolios with $4.4 million and $5.86 million shares, respectively. Although earnings were mixed, the $24.9 billion revenue surpassed the expected $24.47 billion. The 91-cent earnings per share also beat the 82-cent forecast. The 9.6% operating margin was a letdown. However, I see this as a short-term setback with Tesla stock rebounding from deeper lows before. Moreover, while NVIDIA leads AI chip supply, Tesla is working independently to run AI-centric hardware for its FSD software. It is also making major strides into the Dojo supercomputing platform for advanced AI applications. Additionally, with its market cap hovering at a whopping $850 billion and predictions of AI adding a potential $15 trillion to the global economy by 2030, Tesla stands to benefit immensely. Despite a recent 8% year-over-year dip, Tesla's AI-driven initiatives, including its venture into the Dojo supercomputing platform, hint at the massive potential in the AI sector. The third AI stock name is Microsoft. Big money scooped up a net 7.5 million shares of Microsoft, NASDAQ, MSFT, last quarter as Vanguard and State Street took confident leaps, purchasing 3.7 million and 1.5 million shares, respectively. Microsoft has been on quite the run this year, propelled by the buzz surrounding its investments in generative AI bellwether OpenAI. Furthermore, Microsoft was recently highlighted by Wells Fargo as one of the prospective megacap stocks poised for a large surge in the back end of the year. Additionally, Microsoft's fourth quarter showcased astonishing momentum as operating profits remarkably surged 18% to $24.3 billion, and sales grew by a remarkable 8% year-over-year to an eye-catching $56.2 billion. Microsoft's innovative AI Copilot initiatives could bolster this growth, which could add another layer of growth across both lines of its business. Additionally, with Azure's robust 22% market share, Microsoft's dominance in the cloud industry remains absolutely unmatched. Therefore, Microsoft remains among the best tech stocks to capitalize on the burgeoning AI wave. Microsoft's fourth-quarter revenue jumped 8% year-over-year, and with Azure capturing a 22% cloud market share, their position in the cloud domain is as strong as ever.